The US dollar has staged a strong comeback this week, and the driving force has been one key theme: a major shift in Federal Reserve expectations. The week actually began with dollar weakness. On Monday, news of a preliminary US-Iran peace agreement boosted market optimism. The planned reopening of the Strait of Hormuz sent oil prices lower, eased inflation concerns, and reduced demand for traditional safe haven assets like the dollar. As a result, the dollar index slipped towards the 99.40 area. But sentiment changed quickly. Investors shifted their attention to the Federal Reserve's first policy meeting under new chair Kevin Warsh. While the Fed left interest rates unchanged, the tone was noticeably more hawkish than markets expected. The updated projections showed that nearly half of policymakers now expect at least one rate hike before year-end. The Fed also raised its inflation forecast and removed language that previously suggested a bias towards lower rates. That triggered a sharp repricing across financial markets. Traders rapidly increased expectations for future rate hikes. Treasury yields moved higher and the dollar rallied against nearly every major currency. By the end of the week, the dollar index had climbed above 100.80 and briefly touched its highest level in more than a year. Economic data also supported the move. Retail sales came in stronger than expected. Jobless claims remained relatively low, and manufacturing activity continued to show resilience. Together, these reports reinforced the view that the US economy remains strong enough to support higher interest rates if inflation remains elevated. Looking at the chart, the dollar index has broken above the key 100.49 resistance area and is now testing the psychological 101 region. If buyers maintain control, attention shifts towards 101.78 and potentially 103.24. On the downside, support sits near 100.49, followed by 99.31. Heading into next week, the market will focus on one question: will incoming economic data justify growing expectation for Federal Reserve tightening, or will easing energy prices reduce inflation enough to challenge the current dollar rally? What's your view on the US dollar? Is this the beginning of a larger bullish move, or is the market getting ahead of itself on Fed rate hike expectations? Leave your thoughts in the comments below.